In this video, we're going to be talking about 7 stocks that have just popped and are ready and ripe for putting options on them. Now remember, we need explosive markets to trade options. You don't want to just buy an option on a market that's going through an accumulation stage. You want to buy an option on a stock that's exploding, and that's your best opportunity to get into a rising stock. All right, so I've got 7 stocks here that are exploding today and ripe for options trades. So the first one is Amgen. Now, you know I've been kind of harping on Amgen for a while. I've been accumulating Amgen for some time, and it's nice to see it finally start to pop. But you can see it's in a nice, beautiful 3-drive pattern down, drive 1, drive 2, drive 3. So that's our Elliott Wave 3-drive pattern. We're at the bottom. The market popped. How did it pop? Well, we got these big bars, boom, boom, boom. Maybe we should have done this yesterday, but we did it today. So we've got Amgen. We bought a call option on Amgen, and you can see that it's popped and ready to start to rise once again. So that's what we're looking for. We're looking for a market that's down into that high probability state, a drive 3, a bottom of a drive 3, bottom of a drive 2. This is our bottom of a drive 2 right here, right? And it popped and started to run. So now we're looking for this one to pop and start to run. So if we come into Coca-Cola, Coca-Cola popped today, and I've put an option on here, as you can see, and it started to run. So this is one that we're excited about. That's a big pop here out of the red bars at the bottom of this long, narrow channel that this market's been in for some time, and we're looking for it to continue to rise for us. This is McDonald's. Now, I haven't put an option on this one. I want to do that one for you as an example. So we're going to come in here. It's very simple. All we're going to do is buy a call option. I've come out here to 91 days, as you can see. I like about 100 days. That's a good starting point. If you want to do a Fibonacci projection, that's a better way of projecting how far you think that market's going to go and do a little bit of calculation. In fact, let's do that right here on this market since it's all set up for that. Let's come in here, and we're going to come in, and this is the low that we're going to start off with our Fibonacci projection. Come to B, down to C, very simple, right? Easy. We're going to anticipate this market comes up to 100%. So if that's the case, that's where we're going to expect that market to go to, then that's where we would anticipate taking our profits off our call option. So if we look out there, you can see in price and time, if it maintains that same volatility scale that it's been going through at August 4th, 2023, this thing should be hitting our goal. Now, is it going to do that perfectly? Probably not perfectly, but hey, that's what Fibonacci does. It gives us these projections. It gives us some numbers to work off of, and then we can make our projections off of that. So if you can see from where it's currently trading, that's about 2 months, okay? So 60 days. So I like to put an extra 30 days on there to give us a little extra time, sometimes a little even more even. Sometimes I'll even double the amount of time I need. But that's a good 90 days, give us a good start on this market. I anticipate taking profit somewhere around August 4th. So we're going to come in here and got 91 days on there. Very simple. You can just hit buy call, and you can drag that up and down on your different strike prices. You can see over here on the left-hand side where it tells you how much you're going to be paying. That's the at the money, $9.92. If you buy a little out of the money, that's $705, and that would be a break above the previous high. If you do one step in the money, which is sometimes a nice thing to do, get you a little higher delta in there, you're going to pay $1,330 for that one. So let's go ahead and buy that one just for fun. And we're going to go in here, and I'm just going to hit market order on this thing. All right, so we're going to market into this thing. You can see that we don't have a lot of volume today. The highest volume option on there was the one just right outside of the option. That's 100 with over 2,000 open interest. Now, my goal is always generally to have 100 on the volume and at least 1,000 on the open interest. So maybe this one wasn't the best one to do today, but we had 1,200 on the open interest, and so I felt comfortable going ahead with the one that's in the money just by a spot. Will be that volume picking up that other one. You could go with the one outside for $707. That would be perfectly acceptable as well. In fact, let's do that. Let's come in here and we'll buy one just right outside the money, 705. We're going to follow these and track these and see how well they do. All right, so we're going to go ahead. And again, I'm just going to come in here and market order into that thing. And oftentimes you might want to use a limit order and try and capture a little bit better entry. If you do a market order, you're going to get, the full width of the spread as your cost of entry. So let's come in here. There are no commissions trading options on through track and trade. So don't worry about commissions, but there is the spread you have to deal with. So let's come into the next one. Let's come into Nike. So Nike, this has started to bounce, okay? It come down off this big red zone and it started to pop. So we went through the neutral zone. So if we come in here, this is the accumulation area right through here. And this looks to me like it popped out the bottom of the accumulation. This might be the Wyckoff spring. Now, we have to be mindful here. We don't want to get crazy on this one, because if we take our Fibonacci projection, we might be projecting to the downside for the next drive down, right? Because if we do our Fibonacci projection on this one, this is actually an X1A1. Okay, so X1A1 means that we could have the next drive down to the bottom side, and we could see this thing down here in the 100% level. So we'll take a cautious entry here, but I think that we're going to see this market rise. And so we're up on this pop into the rising market on Nike. We got Pepsi. Again, if we take our Fibonacci projection on this one, we can go off this big, long, beautiful run, the pullback. And now we got the pop. The pop, where does that thing seem to want to take us? The pop comes all the way into, it looks like expiration right here. The way I've got this one set at 63 days. The 93 days, the 100-day option wasn't very good. So I put in a 63-day option, which you can see that 100% projection is up there around 63 days out. So we'll be looking to take our profits on this one somewhere around this zone here. I'm going to draw a little box across here. I'm going to expect to take profits on this market somewhere in this zone right here. All right. So that's going to be our testing our highs, but between that 50 and 61.8 projection, if that volatility remains the same on that pop. So that would be a great one right there. Let's come in and do Procter & Gamble. Procter & Gamble, again, we take our Fibonacci projection tool. We just go off the low. We go up here. The high is actually up here. We're going to come over here. The market popped yesterday, and it continued to pop today. So we're looking for that market to continue. Again, that high is right in there for the 100% level, and that's saying right out there around June 12th. So we're going to be looking to take our profits. Let's draw a little box in here, somewhere around this zone here. This is where we want to be taking our profits, somewhere up in there. As it tests that high, we could take some profits there. But it could break higher and continue higher. It'll be depending on what that pattern looks like at that point. All right, the last one that I want to say is Starbucks popped. So let's come in here, put our Fibonacci ruler on there, and we're going to look for this one to pop. Let's go ahead and place an order on here. Very simply, now you can use a much more fancy strategy if you want to, rather than just buying a call. But when you're buying a call, that's what you're looking for. You're looking for these markets that are popping up out of these bottom regions with a big bar, and that's what you want to see. You want to see an explosive market popping up out of here. And so when that's the case, you just want to use a standard call. Those are generally the best. So we're going to come in here, and we can come in and pop one of these in. Now, we can either drag it here. We can see over here on the left-hand side, $610. We can move it up one, and that's above the market, 340, or below the market, 610. Let's actually do one of each. Let's come in here, and we're going to mark it into this thing. Just like that. That's beautiful. And then we're going to come in here, and we'll do another one up in here. We'll buy a couple. All right, so we're going to mark it in with a couple. Now, you can, of course, depending on the size of your account, you can do 10, 20, 30 of these at a time. It doesn't matter. This is the locations in which I like to pick up these things. So I'll do quantity one as our example, and then you can, manage your account appropriately. Again, remember, you don't want to put any more than, between 1 to 5%, max up to 10% of your account into any one stock. You want to keep a little diversification, especially when you're doing options. All right, keep a little diversified. All right, so that's a couple of stocks that I thought that I would bring to your attention for our Friday wrap-up. And if you have any questions, please let me know.